Damian, we're back. Skadi podcast, but we have really got our stabilisers on, haven't we?
We absolutely have. But yes, it's nice to be back. It has been, if I admit, probably a bit too long, I'm afraid. Sorry, our venerable listeners. But yes, we are back. We're still
Yeah,
here.
but that's not all our fault. We've got an excuse this time. That's because we've had the first Skadi baby.
We have, yes.
Yeah, shout out to podcast producer Alexandra Mexi, who's on her maternity. And actually, I wonder if she'll even hear this. I hope she's actually just having a great time and enjoying herself with Richard and their new baby, who is absolutely beautiful, Damian.
He is, yeah. Very, very sweet.
Yeah.
Very big congratulations.
She called us by surprise, so we've had an unintended break from the podcast. You, I, and Felix got together yesterday, and we've gone it alone. We've followed the instructions. We've set everything up, and well, here goes nothing. We're going to try and record
Indeed,
something.
Yeah. Yes. Yes. If the intro music on the way in is a bit loud or soft, then apologies now. But anyway, that's we'll see what we can do. I'm sure we'll be fine.
Yeah, if we can't get it working, then it's just going to be you and me with a comb and a bit of tissue trying to do the Skadi music. Oh dear. Anyway, there we go. Right, Damian, we love a rogue trading story on the Skadi podcast, don't we? I mean, and not only do we love it, our listeners love it. And we've got one. We've got one that's kind of slipped under the radar.
Yeah. I mean, I missed it actually, but you did catch it. Well found, and it's a cracking story actually, and there's a lot of lessons learned, as I'm sure we would love to say, from it. But yeah, it's a good spot by you. It was released actually, well, Bloomberg covered it the 25th of November, which, if my calculations prove correct, is sort of around Thanksgiving, which is maybe what it slipped slightly under the radar.
Yeah, that's right. And actually, I must correct you because I think people who are listening getting all upset, or certainly one listener, which is Antoine, who sent me this story and said, "Well, I missed this. Did you see it?" And I went, "No, but wow, great podcast episode." So I can't claim the credit for this one. This was sent to us by Antoine, who has spotted other stories for us as well. So we really appreciate him. So shout out to him. But yeah, you're right. This was 2 days before Thanksgiving. So I guess, they wanted to get this through the courts. But actually, this is not a particularly recent case, is it?
No, it's not. In fact, it's over 10 years ago that this occurred, and has taken this long to sort of come all the way through to sentencing. And so, yes, there may have been tidbits about it in the past, but certainly it's the first I've ever read of it. But yes, it harks back all the way back to 2015 and into 2016. Shall I give a quick overview of it, I suppose, Nick, just for our listeners?
Yeah. Damian, who are we talking about? Who is it? Who's the person? Who's the culprit?
So the guy is called David Smothermon, out in Houston. And he's a commodities trader out there. And by all accounts, had a cracking year in 2015, made some great money for the firm, for which he was paid a very good bonus actually in 2016. But what appears to have happened is that, having had a very good year in 2015, in 2016 positions started to move against him, and there seems to have been, what seems to have occurred is that there's been a lot of going back and remarking and changing trades to give the appearance of all systems normal in 2016, to show profit still flowing through the system, etc. And I suppose as is the way in the city, you finish a year and then bonus discussions won't really happen. We'll be looking back to that previous year, but won't start to occur till maybe March, April, and in this case May. It looks like his bonus was decided, but a lot of this fictitious trading and going back and changing trades in the system, or getting other people to go and change trades, was occurring in that sort of first quarter of 2016.
Yes,
So
it's an absolute classic, and that's why it's really relevant for now, because we're sitting here 12th of December,
mm,
and you and I will remember very vividly that you have that kind of that feeling in the run up to year end. You know that bonuses are being decided. In fact, I think some of the firms I worked at, I knew my bonus now, but I knew it wasn't going to be paid, like you say, till February, March. But people would come around. You're off. Particularly when I was in Asia, your
yeah.
manager would fly out to see you to kind of discuss things with you, and then of course you're going through that conversation, not really interested, because all you want to know is what's the number.
Yeah, but also,
And
I mean, and I think, well, it's very interesting this year, but because in this sort of environment of everything go up, I think a lot of people are online for a very decent bonus this year. Certainly, and I think I've read somewhere that in fact equity divisions have performed particularly well, and it quite often is the equity division that banks tend to possibly subsidize a bit because the bonds division tends to be a bigger revenue generator. But I think a lot of people would have had a very good year this year, and in a way, there's that always that classic that do you see a lot of books suddenly getting a lot of risk will now continue not to be taken into the last whatever we've got another 10 trading days left probably of the year. So yeah, you want to protect that as well as you can. It would be a bit silly to start swinging for the fences now and create a big hole. That's not really what you're looking to do. But yes,
no, you're exactly right. And then there's this kind of yes, there's that, like the book's closed and you're online for this bonus, but then you're still on edge until it gets paid, because things can go wrong, and optically, even though as far as kind of the books and records go, I made this in that last year. Psychologically that your performance going into the new year is going to affect potentially, or could affect, that bonus before it's paid, and
correct.
that's
Yeah.
the heart of this one, isn't it? Because it's an astronomical number that
Yeah.
this guy
So
is going to get paid,
yeah,
isn't it?
yeah. Well, he made the division it's a commodities business overall. Trammo is the name of the company, and he's an LPG trader, a liquefied petroleum gas. Sorry, tripping over my words slightly there. LPG. And yeah, he made $63 million for the firm in 2015 and was awarded a $14.5 million bonus. So, these are, let's be quite frank, not insubstantial amounts of money that he was paid. He was paid this, but obviously,
Yeah, so there was like there's 11.3 million paid immediately,
yes, yeah,
or
there was a
in
deferral part
in
of it,
May
I think.
2016, and then they had this deferral like that we're all kind of used to.
Yeah,
What I love is that these guys gave everyone a corporate top up to kind of compensate for the deferral, so you weren't sort of getting, I suppose, short interest rates or whatever it was, however they kind of worked it out. But even without the deferral, that's or with the deferral, if you like, that 11.3 million, that's such a significant number
yeah,
to be paid. And of course, yeah, he's well, it appears to have been trying to protect the appearance of P&L up until that point at which bonuses were decided.
yeah,
He had from what I can read, he had a really, really successful 2015, but in doing so, and you've said the number, they really increased the size of the book, and that was making management in New York nervous,
yeah.
as I understand it. But this was, I mean, it's not even, or it doesn't seem to be very complicated what he did, and that's why this story has really fascinated you and I, because obviously we love a rogue trading story, and we could run. I think we should run briefly, just explain to people what he did, because it's always good to be upfront so people can understand. Oh, he did that, but then the consequent discussion about and what we can infer from what the controls were and probably were not at this
More
firm.
important. Yeah.
are quite incredible. Plus, you and I, as everyone, is probably bored to tears, the listeners of the Skadi podcast know, you and I were together at ING Bearings, and I was there at
Yep.
Bearings, and you were there just after. The kind of the resonance with Nic Leeson and his activities in this story are quite high. Actually, there's quite a lot of things to draw on. And again, you're going, well, hang on, that's 20 years after Nic Leeson.
Yeah.
And indeed, it's 10 years since this occurred. It's only just got to court because it's, well, with 2025, but it was, this was perpetrated in 2016. So, you're tempted to ask yourself the question, is this still a possibility in other parts of the financial industry? And I think, well, let's take everyone through it. So, what did he do, Damien? Are you up on that? I'm really happy to talk through the.
I will. We could, between us, I'm sure we'll get the basics of it out. What it looks like he has done is instructed people within his firm to go back and amend trades. So some of those have been counterparty facing trades, and what he seems to have done on a couple of occasions at least is that taken a trade that has been for instance 20,000 lots and just doubled it in the system. And obviously by doubling the size of a trade, it generates double the amount of profit.
Yeah, he's the king. He's the king of the look back, isn't he? He's as soon as something's moved in his favour, he then seems to double the position size to create the impression of
and in fact, I think, I'm not sure when it was, but in sometime Q1, Q2, he's gone back and amended a trade from 2015, from his sort of banner year. He's gone back, and I suppose the key not the key, but it's a part and parcel of commodity markets is that you are often trading quite forward-looking contracts. So you might agree with a counterparty that you will deliver 10,000. Well, I'm going to pick barrels of oil, even though it's not barrels of oil. We're talking about LPG. 10,000 of these barrels, or whatever it may be, per month in the year 2017. So, for instance, in January, February, all the way through December, you would guarantee deliver these at a certain price or a certain price above of a level. So, these are quite forward-looking trades. You might be realizing the profit on them today, even though there's obviously you're nowhere near delivery of the underlying. And then you can then go back, as he has done, and instruct people to amend the terms on those trades because, that even though you're going back to 2015 to amend the trade, the actual physical delivery isn't happening until 2017. So there's a lot of time to play with.
This is a cancel and correct story, isn't it?
Yes.
And it's because he has two books. He's got a physical book, and he's got a financial book. And the amendments to the trades in the physical book, because of all this long dated stuff, has enabled him to be able to make these amendments. It's also interesting that he utilised for all the investigators listening. That how they kind of uncovered this when they investigated. And there's a fantastic deposition by one of the FBI investigators that published, submitted her deposition in October 2018. That's Angela Tazzone. But he would write himself notes in Microsoft Outlook in the notes function. So again, it's sort of how do you discover that? Because this isn't, emails and search terms. He's actually kind of it reminds me a bit of. Do you remember the old the terrorists sharing the email draft and logging into the email account and kind of because nothing's sent. Although in fact in one of these occasions where he's asked an employee to amend, because again he doesn't have the ability to amend trades or book trades. It's all done through a different set of employees who are doing this for him.
Yes, all these amendments, from what we've read, are occurring in the accounting system, but there's no mention, in fact, that I've come across, maybe you have, but I don't think we have between us, we were chatting beforehand, about this sort of order management system or whatever he would have been using that would look, I would hope, at what his positions are and what his risk is. But although he can input trades in there, any of these amendments are occurring. Well, he's instructing a second, third, fourth employee to amend the accounting side of it to reflect a doubling of position or a change in price.
Yeah, so there's a kind of, that's an interesting sort of set of kind of failings there, in that if the trades are being booked in the the order management system or whatever position keeping system, but then not, the accounting system's not replicating what's in there. There's double entries. There's a different set of entries into each, and no reconciliation between both, and that just seems like an absolute shocking howler. Or there's suppression.
Yes, well, that's what I was going to say, because obviously, if you go and, if you amend a market trade that you would like to think start to trip things immediately, because that would then cause a break with your other counterparty. But if it's a client trade, possibly you can amend it in your system, but then suppress the amended confirmation that might go out. But the market side, there's always looking to match. But still, I mean, it's in this day and age. Well, I know it's not this day and age; it's 10 years ago. But you would think that controls would be all over this sort of stuff. This is a pretty basic level stuff.
So the kind of it seems that basically when a trade's gone for him, he ups the size of the trade to kind of maximize the P&L. And then on the ones that are going against him, he amends the price to move it in his favour. And then there are these notes to remind himself that the FBI have uncovered. Sort of note to oneself: change the quantity. It isn't as blatant as change the quantity, but it's basically little notes to himself, just giving him a reminder to double the Jan cargo with the counterparty to 40 kilotons. It's that kind of thing.
Yeah.
So,
but I think there were notes also further forward in his diary saying, "Don't forget to halve it back at some stage."
Exactly. So it's like note to oneself. Don't put cranberry on Damian's turkey sandwich. No, it's not quite that. It's like note to oneself: double the amount of cargo to the counterparty to 40 kilotons. So yeah, I mean, really amazing. There was a red flag in the margin calls, in that there was a inconsistencies between the margin that was being called for, and this is in March 2016, just as the bonus discussions are taking place.
Yeah.
And what was expected from the positions. And it doesn't seem, while that was noticed, it doesn't seem like that was kind of fully followed up. And it is in May, 2 months later, that he gets himself his bonus.
Well, I mean, you began the podcast talking about the sort of echo with Leeson, and you say this wasn't followed up, but a bit like in the Leeson case, London was very happy in a way for their Singapore trader, because he was just making so much money. It was never a question particularly that you go and have a particularly hard look at. If there was an extra margin call coming in, you were like, oh well, he's making so much money. Let's not get too involved. So an incredible sort of echo of that case through to here.
Yeah, it is, because also when this all starts to unravel, is by August 2016. So the fictitious trading is all occurring between March 2016 up to August 2016. Yeah. So he's kind of starting in March to kind of protect things, and it seems to be that, because he's already flagging to management that it's going to be a rough ride on the financial book. And I think that's where the problem starts, is he starts to kind of try to socialize the problems that are happening on the financial book. He's probably not open and fully frank about what the real problems are on that financial book, and then has the ability to use the physical book to do some massaging of trades, cancel and corrects, etc., that gets himself into this position of generating this extra P&L. And the extra P&L that's generated over the course of 2016 on this physical book, I think, is to the tune of about $35 million. But when it comes to the the financial book, and it's the CFO that contacts him and says, "Oh, there's some discrepancies on the book. Finance have actually, notified me that there is discrepancies between, what's booked in these physical, contracts. Can you go and take a look and just try and make sure everything is ironed out?" But when they actually go through and start really looking at this, they then propose to have all of the physical contracts sent over to New York from Houston so that they can review them. They start talking about doing a full independent audit of the Houston entity. But it's at that point that they realize or the CFO asks him the question, is the financial book mismarked? To which he confesses and says, yes, it is. And it appears that the financial book is overestimating positions to the tune of $100 million versus the prices provided by third parties. So it's all along the way, you're raising questions about the controls that they had, the simple controls that when I say they had, that they didn't have between this subsidiary and the parent company. Because I think you found out that they were emailing a lot of.
So there was an email that was supposed to go daily from Houston back to head office of positions, which in the court documents was revealed to be 200 pages or so long, which seems an incredibly large file size. And actually, it wasn't sent every day, and often I think they would say, "Oh, it didn't get sent today because nothing really changed from yesterday." Which one is a bit of a red flag, because obviously marks do change every day. There's no way that every single position on your book has been unchanged over the day. But I'm slightly flabbergasted that a 200-page report is seen as a sort of perfectly acceptable. What was there? No break report? Was there no? What's the flag the biggest changes in price from yesterday or the week before? Just a sort of massive 200-page data dump. Which, let's be brutally honest, no one's going to. Well, I'd be very surprised if anyone would look at a 200-page document full of numbers. It's just it's far too much for a human to understand. I mean, possibly in this day of AI, etc., those documents will be much easier to parse and decipher. But that seems incredible to me.
Well, it just seems like one of those botched controls where, that it's not effective. It's just someone said the control is we're going to send a report between the subsidiary and the parent. But the control, should be someone to actually review that report and do something with that report and tear it apart or look at the effectiveness of that report and realize that, 200 pages, you just can't see the wood for the trees. And as you point out, where's the breaks report? Because everything he was doing should have generated a break. And that's, again, why I think he's doing everything in the physical book rather than the financial book. In the financial book, he's doing mismarking, which the IPV have completely missed. And you've got to query, what was happening there. And then in the physical book, again, these sort of moving these prices around, because we could have a look at the volatility of the LPG market, but looking at the amounts that he's moving these prices around on a daily basis, you would think if you had any market conformity checks, this stuff would be flagged, pretty quickly. But again, as you've mentioned, these are a lot of forward trades, and maybe there's a lack of understanding between in the areas that were supporting his trading and checking his trading as to what could happen in the the forwards market, and what's the tolerance.
Yeah, but I mean,
how much these things should move.
Some of the recent work I've done within a commodities trading house and also a bank that has a commodities desk, there's a monthly IPV process. I mean, they run IPV on a daily process, but there's a sort of monthly gold standard process that is run. There's a product out there called Totem, which is, I think, now part of S&P. And that is marking spot positions across commodities, but then also forward curves. And so you would look, you would submit prices into that, then you receive prices back from that, and you're looking to see that you sit in tolerances within the pricing that comes from that. So, I mean, you've mentioned IPV before. It would appear that there was no IPV whatsoever going on here, or if it was being overwritten, because you'd think something like a totem report would absolutely pick up these what I would call slightly more esoteric markets, as in the underlying might be relatively generic, but obviously you need to be able to see what forward pricing looks like for what is essentially an OTC contract. So,
yeah, I mean, there's another the sort of nasty markets kind of thought I had on the wording of how the financial book was overestimated, because it says, the positions on the financial book were overestimated to the tune of $100 million versus prices provided by third parties. And my thought of that, Damien, was like, it's the old kind of, the sharks swimming in the tank, and they realize someone's in trouble, and they're like, right, because everyone knows, or everyone senses in the market that someone's in trouble. Word gets out,
yeah,
and then they figure out who it is. They figure out which way they are, and then they're like, right, they're going to have to unwind.
yes,
And they just floor all the prices. So maybe there's a pass, maybe if that was what happened, but we don't know, do we?
no, we don't.
But it does. I don't think that's what's happened. I think that there's a complete failure in the IPV process, and he's the chief executive officer of this branch. He gets made the CEO. I think he's also as part of the kind of the bonus package in 2016, where he's paid this vast amount of money. I think he joined the board of directors of Trammo, which is this 60-year-old business, that had its kind of foundation in trading ammonia,
Yeah,
and has got this entity down in Houston, swinging the bat in LPG. He is this dominant character, and this goes back to Leeson. This goes back to 1995. What was Leeson doing? Leeson was the front office guy that managed the middle office, and that the back office, and that was the separation. I probably should use the word operations. I think those are very outdated terms. I'm showing my age. Some of those kind of other terms. Shout out to Julian Rimmer, actually, and his favourite cocktail, the back office banger, that we used to go out and drink in the Pavilion. He's got the ability to just lean over employees and say, "Oh, you need to rebook these prices," and they do so. I'm wondering, when you've got someone coming round with the IPV, is he so charismatic? And you and I, Damien, we've had heads of trading that we've worked for that have been extremely charismatic.
yeah.
That really, I could see being able to absolutely just, like Teflon, when someone comes round to try and interrogate them on any of this stuff. It's very, very hard, and it goes right to the heart of culture between the business and those control functions. And also, let's ask ourselves the question here: what is the kind of the pathway for people working in operations in this firm? Are they looking at this guy that's so successful, so swaggering, that they're hoping that they get a chance to get onto his desk because, boy, he's just banked this much P&L for the business last year. His bonus is going to be this. I mean, heaven knows what the bonus was for the rest of the team. Therefore was the kind of, the challenge, if you like, on all this IPV stuff, very, very weak. Or, is there other stuff going on? Was he,
well, yeah. I mean,
was he able to mark his own homework? Was he
yeah,
providing prices to brokers and asking them to
feed them
submit
back.
them back to
Yeah.
product to finance, product control, etc.? These things can happen, can't they?
They can, yeah, and we don't really. I mean, by all accounts, it was a pretty small office there. So there might not have been a risk department sitting there within the office. So that would be this 200-page file going back to New York. Well, sounds like it wasn't being interrogated there, but that's where you'd expect possibly that all that to be being checked by risk. But we don't know. We haven't done enough digging into how big the entity was in Houston. But it sounds like it was sort of a couple of traders, a couple of ops, and finance. I don't think it was much more than that. So,
well, I guess also this happens all the time. You get someone. I mean, I don't know when they acquired this, and so this might sound a little bit speculative, and people probably know the answer. But talking on the top of my head on the podcast, as we said, Trammo, 60-year-old firm, its heart in ammonia. If you're used to controlling and looking into what goes on in the ammonia market in Switzerland, and you've got these guys trading LPG out in Houston, how familiar are you with what they're up to?
Yeah.
How much you're prepared to just listen to what they say in their explanations, and that's the other thing on explanations. I've seen so many times, and I'm sure you have, where as long as someone can fill in a box that gives some explanation without actually verifying the validity or even understanding what that explanation is, just the fact that there is an explanation is often enough to effectively allow the problem to go away. If the problem is, well, we can't get you to agree this, and so on. So yeah, the IPV failing is quite incredible. But again, these are long dated. Well, we don't know on the financial book actually, but we think looking at what's on the physical book, and your experience is that most of the stuff on the financial book is hedging what's going on the physical book, so they kind of probably got similar durations and stuff. If you're looking at longer dated things, and you've talked about totem and so on, there is scope for pushing around some of the valuations in this stuff, some of the curves, the static data, the inputs, the assumptions, the model assumptions, as well, to kind of help smooth out the P&L, and so on. And anyway, this goes back to the point about the 12th of December. Here we are, we're getting close to the end of the year, and I think it's really, really hard. But the functions that are worth their salt are used to this, but recognizing that there'll be traders that have absolutely knocked it out of the park, who have beaten budget by a lot. They've probably had their budgets flexed up again in July or September or whenever it was when they've achieved their budget early. They don't like that, and they won't certainly be wanting to print all of that P&L. They'll probably try and hold a little bit back for next year. And there'll be those people who've had an absolute stinker of a year, who will be probably trying to push as much bad news into this year as they possibly can, because they know they're not going to get a bonus this year, or a minimal bonus.
Yeah.
So why try? Why try and rescue the P&L? Why not just push things a little bit lower, mark the shorts a little bit higher. And then when we get into the next year, release all that P&L and get a good start to 2026. So it really is this time of year when all of this stuff will be happening. And we pointed out the obvious with bonuses and bonus payments, but this shows, this particular example, that it's not just about year end. It has the potential to run all the way up to payment date, and that's really sobering to realize that someone perpetrating a fraud is going to have to run it for that long. But he doesn't seem to have had as much mettle as Nic Leeson, who when everyone flew down to Singapore to go and do the kind of independent audit, he managed to bounce around Cymex and just tell everyone he was too busy trading in between eating lots of wine gums, and just he managed to avoid the audit manager. I can't remember who it was. I think it was Gordon Bowser or someone, but managed to avoid him for a whole week. And then the guy just had to fly back to London. This guy just seems to have completely caved in. On the, I think it's the 1st of September, I think it was. I can't remember. Let me just have a look on our notes for this one. But he effectively just said, didn't turn up for work, 1st of September, he doesn't turn up for work, and then he later calls the CFO just to let him know that the situation's really bad. I mean, that must have been a brilliant phone call. And then just announced that he was checking himself into a substance abuse rehab place. So yeah, just unravelled spectacularly, and there were real consequences to this, because more than 200 employees were laid off in various divisions through Trammo. The whole LPG subsidiary was closed, and he's ended up with a 3-year prison sentence, and I think after that a further 3 years sort of supervision order. This again, the other kind of situation that this has resonance with was Jonathan Bunn, who you and I knew, back in the day, who then subsequently went on to somewhere else and ended up rogue trading. But he had a very, very minor position, really, by all accounts, in terms of the kind of sizes that we're used to trading, of I think about £7 million in HSBC. But the losses on that was enough to close that firm and make people run, and he got a very hefty prison sentence as a result of that.
Really, no, you're right. As in, compared to the Lease and the Curvial, the Adiboli, which were big numbers. This isn't. I mean, it's a big number. 100, I think it was 200 million in total. But enough. Yeah, as you say, the collateral damage was huge. It was absolutely. It basically put the firm out of business. So,
I think one of the things, just sort of looking back at this, that I was surprised about, because I'm not a commodities guy. I'm a derivatives guy. I'm a structured credit guy, and having traded the convertible bond market through 2008, and having traded the equity derivative market through the Asian crisis in '97, the kind of the alarm bell P&L moment for him. Did you notice how much that was? Like, he had a kind of, I've got to kind of radio into HQ and explain what's going on. Do you know how much money he lost on the day?
I think it was like 40 grand or something, wasn't it?
Yeah, it's like $36,000. I mean, that just, when you and I were trading pairs, I mean, that just wasn't a day. It's just on risk arb. Risk arb where you supposedly got most of the stuff hedged and all that. I mean, a P&L like that just wouldn't raise alarm bells. So I found that kind of strange, in that you've got someone who's making multi-millions for the firm, and yet is calling in on a kind of $36,000 kind of, I've had a bad day. That really surprised me. But anyway, that's just a small detail on this particular situation. But again, maybe that's just the nature of LPG trading. I don't know. But I found that really, really intriguing. Or on the financial book. But there we go, Damian. So that's a fascinating rogue trading situation to round off the year.
We'll file that one away to add to our list. But yeah, no, great, good spot.
So thanks, Antoine. I'm not going to take the credit for that one.
Good spot, Antoine. Really interesting. And actually, as you said, incredible that so long after lease and all these things still occurring. Frighteningly, I think we'll probably see more in the years to come. I mean, there'll always be, slight differences to them, but it's a really interesting read through, and hopefully interesting to our listeners as well to flesh it out a bit.
Great one. Well, we'll be back in the new year. I don't think we're going to fit anything else in before year end, but maybe. But anyway, it's great to be back and on the Skadi podcast. And I think if we get this one published, there's still a question mark, maybe we can say we've got our stabilizers off. All right, David, until next time.
Brilliant. Well done, Nick. Cheers.